It's Wednesday, December 3rd. Let's level up. Probability of the Fed rate cut next week is 89.2%. We had a pretty crappy jobs report. The last one was actually upgraded. This is the ADP number, right? Of course, the private employment. I always like the BLS number because that tends to be the one the market really keys off of, but we've had a government shutdown, so we are going off the private payrolls, and they were a big miss. So what now? I think that this increases the probability, as we've seen, that the Fed will be cutting at the next meeting, unless we get some kind of really insane hot inflation number on Friday for the PCE number. That seems very unlikely to me because the last one didn't really show that much. It was sort of a push me, pull you type of number. Not too great, not too bad. It'll probably be more of the same. I am very skeptical about any data right now because we had the government shutdown. I will be very curious to see what the revisions are in the next couple of months. That being said, rates should come down, but they haven't really been. We've been keying off of this yen carry trade blowing up and the Japanese yields rising. I think that's lifted all boats. I'll be very curious to see what happens after the Fed decision because recently we've seen rates drop ahead of the Fed decision and then rally afterward. It'd be interesting to see if rates went up into the Fed decision and then went lower afterward this time. The last 3 times we've seen this happen where the rates go down ahead of the Fed meeting and then up post that meeting. Traders do what works until it doesn't. Let's see if this time is any different. The market has been rebounding well off of these most recent pullback lows. I was shocked to see a CNN greed and fear gauge down at 6. Given the fact that we only had a 5% pullback and not even a 10% pullback in the NASDAQ. That's pretty extreme levels. Just for context, we were at 3 after the Liberation Day 35% pullback. Now, with regard to the VIX here, we are not below the level we need to confirm new highs. We need to get back below 1562 for a move down into the 1421 to 1470 area. If we do rally, anything over 1724 to 1756 likely sees 1851 to 1870, which is, of course, the 50 MA and the reference bounce high we saw in 1126. If that area can clear, we get over the 50 MA, we get over that 1126 level, then I think there is room to the 200 MA at 1969 and maybe even a run into the 22s. But as of now, it just seems status quo. I think people will not give up the goat on the VIX as long as we are ahead of the Fed decision, maybe post-Fed decision, and that's when I think we could have the all clear for the end of year rally. Assuming the Fed doesn't muck it up, and that's a big if because Powell tends to like to do that. As far as the ES and the NQ go, we had a liquidation break off the open. It did recover into the close. We did have a little bit of a rich close. If it were to repair those rich closes, the ES would be 68.50 half, and the Qs would be 25,582. So those are downside targets if there's a liquidation break early. As far as the ES goes, anything over 68.55.75 to 68.64 half, particularly the 68.64 half, I think is bullish. We could make a move up to this new channel high. If we did it at the open, we'd be looking at 68.86. If we did it by the close, it'd roughly be 68.89-ish. In the Qs, it's pretty far away from the channel high, so I'm not going to tout that. But anything below 25,670 to me is weak with risk of liquidation break. Maybe to retest the 200 MA 30-minute, wherever that is. It's currently 25,462 half. On the upside, if we can clear and hold the 25,670, I think we see 25,856, which is the 78.6 of the range. Right now, we're above the 78.6 in the ES. We are targeting it in the Qs as long as we can stay above that 25,670. Which is still to be determined. As far as SPY goes, I told you anything over 681.39, which is the 78.6, is bullish for a still higher prices. After that, the bulls need to clear 684.96. We did find a little resistance there today. After that, there is a small gap fill, the 1029 gap fill at 687.39, which is, of course, the last Fed day, and then the all-time high at 689.70, which was the Fed day high. Anything back below 681.39, and particularly low of day here at 679.69, I think risks a liquidation break to those 1010 to 1120 highs. 673.95 to 675.56, and then we'd see. As far as the Qs go, night putting right below the 78.6 at 624.96. If we lose low of day here at 618.03, I think we could retest that similar apples to apples range of the 1010 highs at 613.18 to the 1120 highs at 614.03. We might find some support a little bit above there at the 61.8 at 615.51, but I tend to think we would retest those prior highs. Remember, those were the highs before big dump candles. What was resistance now should be support, and really must be support to sustain the end of year rally thesis. Apple got my 285 plus. We stalled just shy of my 2 times range target of 289.14. That's why we have to stay vigilant. We stopped at 288.62. Is this the end of the Apple run? It's possible. There might be a little bit of pullback. I didn't particularly like the close, but anything over 285 to me is more bullish than bearish. Below 285 is a little bit more bearish than bullish. Bulls need to stay over the 285. That should have been your stop, by the way, if you were long today. I think you could even use the opening 5 or 15 minute range. That would have gotten you out below 286. I believe. Careful for a lower high tomorrow, and if we were to take out low of day at 283.30, there could be a liquidation break, maybe to retest 280 area, maybe the 277.32, which would be a retest of the breakout. Apple doesn't always make it easy. Often there's chop with liquidation breaks, but if we do regain steam here, the 289.14 is the 2 times range. If we made it up to the channel high tomorrow, it'd be 294.08. And if it took a few days, the 2.618 target is 296.44. If you're long calls, maybe make them into spreads with those as upper strikes. CRM had some decent earnings. The good news is it's up. The bad news is it's into some resistance here. This 244.54 plus is a volume node. If it does continue, we could see a downtrend around 248-ish, so probably a good area to trim into. Maybe there's an overshoot to the 61.8 at 249.86. I would only get bearish on this now back below the 50 MA, 243.15, so below there, stop and or short. Often we've seen these pops lead to drops, so those are the levels. Snowflake also reported earnings that had been up into the numbers. You know I don't like that setup. It is dumping. The key moving average where we found support the last time is the 100 MA, currently 231.75. So that would imply about an 11-point drop from where we are in the after hours right now in the 242s. Shorter term, if the bulls can get it back up over and stay over, let's just say 250, I think they're good. Anything below there to me is vulnerable with liquidation break potential. I would think at least to the 237.72 to 241.50, but my downside target, if we do see continuation with downgrades and stuff tomorrow in the morning, that would be that 100 MA. NVIDIA actually still acting okay, but not really rallying. It's been a little weak. We couldn't get over the 38.2, which is a weak bounce test. We couldn't even get to it fully at 185.84. Remember, the moves below the 50 MA and above it had been longs. Now I'm wondering if moves above and below the 50 MA are shorts. 50 MA is currently 186.87, so anything below that to me is sideways with liquidation break potential. Moves above it that sustain get bullish. Above and below is an outright short. Intel still really strong, right up into the channel high and my resistance level at 44.09. Probably a good spot to trim. One of the reasons I'm not as bearish on Microsoft, everyone got super bearish on Microsoft thinking that they're going to have some problems. I'm not so sure. Intel on their last earnings said that there was a big pull forward in demand to upgrade Microsoft systems. So that can't exist in a vacuum. If Intel is still doing well and that's still taking place, you have to think it's still getting the Microsoft upgrades, the old Wintel relationship. That being said, Microsoft is a little bit weak. I do think that the 200 MA could be a right or right out by the dip at 469.13. Anything over high of day when what shouldn't happen does happen. So I have an alert over 484.24. That to me would be a long. As far as Bitcoin goes, continuing to rebound, not exactly setting the world on fire here. 20 MA could be some resistance at 94,098. If we do a check back to the underside of the old up channel, you're looking at the lower end of the prior support range at 99,090. I think anywhere between there and 103,745 could see some resistance. That had been prior support and now likely will be some resistance at least on the first pass. Generally speaking, markets have recovered quite a bit. I like raising stops. Don't let price get below key fib levels, particularly the 78.6 and the SPY. As long as the NASDAQ holds together and we still see rotation into these big cap stocks, today we saw a little bit of move into oil. There's always that back and forth, and I've told you I think oil will be bullish for Q1 because of allocation. It might gunk it up a little if it's too strong into that, but I still don't mind selling puts on dips. I think that the markets can rally. These big cap tech stocks are in these major ETFs, and these major ETFs run the tape these days. Like and follow for more.